Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Quinny Good Evening. Today is Monday, November 24th. I'm analyst Jiang Jida. When you come online, remember to like, subscribe, and share. If you have any investment questions, feel free to leave us a comment. If I don't get to your question today, I'll reply to everyone in class tomorrow if there's a chance. After a week-long holiday, I'm finally back at work. Honestly, every time I come back from a long break, I feel especially tired. Why? Because there's a lot of work to catch up on. So after these 7 days off, if there's time later, I'll chat with everyone about what happened during these 7 days and share some interesting things I encountered. Anyway, with a new day and a new week starting, it's Monday, I have a lot of economic data, many earnings reports, and plenty of international news, big and small, to go over and comment on with everyone. So if you have any investment questions, feel free to leave them in the live chat or on the message board. I see every single comment you leave, and I'll respond to all of them. Let me reply first. Let's take a look at today's investment highlights. Good evening, everyone. As soon as we went live, we had Mingmei Daizi, and today we also have Yulan Gay, Anna Ya, and Shu. I'm not sure if that's Sun, the student who's flying. Good evening to you. And also Alice Fu and Hector. Good evening, Melissa. And Louis Young. Good evening. Okay, let's get started with this week's investment forum. First, let's talk about the mixed signals from the Fed and the Ukraine dilemma. Mixed signals from the Fed. Of course, we can see that as we approach mid-December, with the Fed's interest rate decision coming up in the early morning of December 11th, many Fed officials are gradually entering what's called the blackout period. During the blackout period, they're prohibited from making public comments, especially about market direction. So before the blackout period, you'll notice a lot of officials are rushing to state their positions. Some are dovish, some are hawkish. Today, I'll briefly summarize for everyone which officials are more dovish and which are more hawkish. This is something you need to pay special attention to, especially which committee members actually have voting rights. Today, I'll be giving you my take on that. In addition, regarding the geopolitical risks in Ukraine and Russia have been fighting for over 3 years now, and the situation on the battlefield has remained deadlocked. But in the past few days, guess who showed up? Trump. Trump proposed the so-called 28-point peace agreement between Ukraine and Russia. This 28-point agreement is quite extensive, but whether it can actually bring some hope to the war between Ukraine and Russia is something we'll discuss. I'll also talk about the dilemma Ukraine is facing. Where exactly is this dilemma? Is this 28-point peace agreement really a good thing for all 3 parties involved? That's a question mark right there. As for the industry side, just pay a bit of attention. During this whole week while I was on vacation, I noticed the stock market was all over the place, especially both the US and Taiwan stock markets. There was one day when the Taiwan stock market dropped more than 800 points in a single day, and then the next day it dropped over 900 points. I was wondering, what's going on? Is the stock market plagued by some epidemic? So I took a closer look, and actually, it's pretty simple. There are mainly 2 key points. First, some Federal Reserve officials have started to express more hawkish views, saying that in December, rates might remain unchanged and there won't be a rate cut. Another issue is on the industry side, the idea of AI as a perpetual motion machine. People worry the capital flow may not last and companies worldwide might not generate positive cash flow or revenue fast enough. There's also debt. Firms like Oracle and Meta have taken on a lot. The main question is whether these investments can be recovered and actually turn a profit. These are the 2 main focuses of the market. One is the statements from Fed officials, and the other is news related to AI. Of course, today there's a piece of news about the pressure on OpenAI. When it comes to AI platforms, OpenAI is considered one of the top players, whether it's in AI development, conversations, or platforms. But what kind of pressure is OpenAI facing? This pressure is related to its competitors. So today, we need to pay special attention to who its competitors are and what exactly Google has done to make OpenAI feel this pressure. In addition, recently, Bitcoin's price has been continuously dropping, and at the same time, related Bitcoin or concept stocks related to cryptocurrencies are something you need to be especially careful about. In particular, a company like NSD might be facing the risk of being removed from the index as a constituent stock. So what exactly is happening here? Tonight on the GN website program, I'll be going through and commenting on a lot of information for everyone. All right, Franklin, good evening, and Silalu7251, good evening. Hello, Kibao Shui, and also I love 902502, good evening. All right, okay, so today we'll discuss related topics. First, let's review some economic data released last Friday night. These data indicated that the US economy wasn't actually heading towards recession. At most, it was flat or even slowing down. The current US job market is trending towards a moderate and gradual decline. There hasn't been a collapse, but the job market is indeed sluggish and slowing down. However, other data, including financial reports and economic data, were released gradually during the US government shutdown. For example, last week, the US November S&P Manufacturing and Services PMI remained above 50. As we've discussed before, in PMI data, Purchasing Power Index, a PMI above 50 generally indicates expansion, while below 50 indicates contraction. Last Friday, the Services and Manufacturing PMI, the PMI data, have remained above 50, while the Manufacturing PMI reached 51.9, lower than both expectations and the previous value. It still maintained an expansionary value of 50. The Services PMI data performed even better, reaching 55, exceeding both expectations and the previous value. Overall, the service sector accounts for nearly 60 to 70% of the US economy, so service-related PMI data is relatively more important than manufacturing PMI data. Currently, both manufacturing and services PMI data appear to represent relatively stable growth, so there's no need to worry about a recession in the US economy. However, the market's concern isn't about economic data like PM 2.5. Instead, it's about the upcoming release of CPI, PPI, and even data such as unemployment and non-farm payrolls after the US government reopens. Some of these are revised values, some are the latest numbers, and when all of them are released in a rush, people worry that the market won't be able to absorb the related negative news or shocks. That's basically the situation. As we mentioned in our show 2 weeks ago, when looking at the data released after the US government reopens, you should focus on the very latest data, not on the numbers from August, September, or even last month, October. You can look at those, but the main focus should be on the most current data. I think that's a more grounded approach. Are September and October data unimportant? They are important, but after 2 months have passed, you can use them as a reference, but don't overhype them and say, wow. If you focus on the September or August data, like how high the consumer price index spiked, or if the unemployment rate shot up to 4.5%, or if non-farm payrolls dropped below 100,000 and so on, and then use that to judge the current market, especially when we're looking at Q4 or even December trends, it could actually conflict with the present situation. So again, I want to remind everyone, it's fine to look at past data for reference, but the most important thing is to keep your attention on the very latest numbers, including those from November and December. I believe these will have a more direct impact on the current market than looking at September or October. Also, the US's 1-year and 5-year inflation expectations for November are looking good so far. Everything seems fine. Why is that? The main reason why inflation expectations haven't surged dramatically is because the trade war between Trump and China is moving toward a 1-year truce. Why a 1-year truce? It's to prepare for next year's midterm elections. During this period, you can't have too many strange or volatile moves. If, by any chance, relations with China go south and inflation really spikes, both the ruling and opposition parties in the US will see their poll numbers take a big hit, because people care a lot about the economy and their livelihoods. So, during this 1-year adjustment, I don't think Trump will take any overly aggressive actions, especially with the midterms coming up next year. Under these circumstances, inflation expectations have slightly decreased. The 1-year rate has dropped to 4.5% and the 5-year rate to 3.4%, both lower than last month's figures. So tonight, let's keep an eye on the Dallas Fed's November Business Activity Index. This data isn't particularly important, so just take a look and move on. The main point is that it will be released at 11:30 tonight, and that's the only data coming out this evening, just for your reference, but it's not that important, so just take it neutrally. The previous value was -5, and the forecast is -2. All right, good night. No. Good evening. Did you go anywhere fun? I'll tell you all in a bit. Let's see if there's time later. Good evening, Kibashui. It's great that you like listening to the professor tell historical stories. I remember before, someone, Jeffrey, and also Xiaolong, sometimes asked me if I was a history major. I'm not a history major. I just enjoy reading history. I like history and also enjoy looking at geography, especially places with historical artifacts. I'm more interested in those kinds of things like historical sites. I love visiting historical sites, or going out to see beautiful scenic spots. I like to see mountains and rivers. That's just how I am. I don't really like staying indoors. Sometimes looking at historical sites and things like that isn't everyone's cup of tea, because usually when my friends go out, they like to eat, drink, enjoy good food, and watch movies, right? Stuff like that, or go shopping. But I prefer to do outdoor activities. So like last week, during my 7-day vacation, I basically spent all my time outdoors. I'll tell everyone later which places I actually went to. Good evening, Emily. And then Xiaolong asked, is it true that TSMC is expected to earn $97 per share next year? From what I see right now, I don't think they'll make $97 next year. According to Bloomberg's estimates, it's about $77 per share, not as high as 97. So simply put, if you say $77, let's round it up to 80. Do you think TSMC stock will go above 30,000 points? Basically, since on the show we can't give everyone a direct index prediction, we can only mention that right now the Taiwan stock market is around 27 to 26,000 points, fluctuating, sometimes up 200 points, sometimes down 200. For every $1 increase in TSMC's price, the index rises 8 points. So do a simple calculation. If TSMC's EPS next year is $80, let's use the higher estimate. If next year's EPS is like this year's, about $70, that shouldn't be a problem. If it reaches $80 next year, meaning 2026, not 2027, so if in 2026 the EPS is between 77 and 80, let's use $80. Then multiply 80 by a price to earnings ratio of 20 like this. Once you do the math, how much is that? It comes out to about 1,600. If you use a price to earnings ratio of 25, then 80 times 25 is about 2,000. So whether it's 1,600 or 2,000 using the PE ratio calculation, you can estimate roughly how much room there might be for the Taiwan stock market next year or the year after. Just do a quick calculation and you'll have a general idea. You get what I mean? So you just take your EPS and multiply it by your PE ratio, maybe 20 or 25 times, and you can roughly estimate it. Many foreign institutional investors are estimating where TSMC's stock price could be next year. Once you know that, you can compare it to TSMC's current price. How much is the price difference? If you take that price difference and multiply it by about 8 points for every dollar, you can more or less estimate, with TSMC's support for AI, where Taiwan's index might be next year. Just do a simple calculation and you should be able to figure it out. Due to program regulations, we can't disclose the index number, so I just wanted to add that for everyone. Good evening, everyone. Is this vid supposed to be a chat? Good evening. Also, cash call? Does that mean golden bull? KHCow66, good evening, and hello to Banana Shang. This whole week, it's been me hosting. Just a reminder, this week, because Thursday, November 27th, happens to be Thanksgiving in the US stock market will be closed. So this Thursday, our Channing Wan program will take a one-day break. That's great. We get a day off to rest. Honestly, after a whole week, coming back is really exhausting, and there's so much homework to patch up on. So, just a reminder, this Thursday, November 27th, we'll take a break for Thanksgiving. But on Friday, the market will open as usual, and our program will also continue as normal. Now, back to where we left off. Let me answer some questions from everyone. Last week, for the entire week, for me, Saturdays are usually really busy. Sometimes I'm busy with things at home. There's always a lot to do, so before I go out to have fun, I need to finish many tasks. When I travel, it's usually from Monday to Saturday. Last week, I stayed in the country because plane tickets abroad were too expensive. So I traveled domestically since I always enjoy being outdoors. I like to go outdoors. Let me share more with y'all, because right now that we're at mid-year and heading toward year-end, many of you might be working, and if you still have annual leave, you should use it soon. As we approach year-end, honestly, this year has been tough for everyone. It's been harder for all of us. Don't be fooled by Taiwan and US stock markets hitting new highs, making it seem like everything is great and everyone is making money. That's not true, just because the US and Taiwan stock markets are reaching new highs. Who's making money? Companies like TSMC, Han Hai, Fubon Financial, Delta Electronics, these companies keep hitting new highs. They're hitting new highs, but some small and mid-cap stocks keep hitting new lows, or even some traditional industry stocks. Think of the Formosa Plastics Group, Asia Cement, Far Eastern Group. They just keep dropping, falling further and further. Or take some of the bicycle concept stocks like Giant and Merida. They're the same. So even though the Taiwan stock market and the US stock market are hitting new highs, not every stock is making money. I believe if you've been following along, you already know this. So since this year, everyone thought the market would see a lot of new highs in the index, but actually this year has been affected by many external factors. The index might look strong because of TSMC's performance, or the US market is being propped up by AI themes, but in this year's market, and even next year, the volatility will still be high, especially because Trump is in power. With Trump as the leader, we can imagine that starting from February, March, and April of this year, the global reciprocal tariffs kept getting imposed all the way until the end of October this year. It took a lot of effort, but finally, many countries' negotiations were more or less settled, and China and the US also gradually reached agreements. So actually, this year, there have been many uncertainties with foreign debt, and the market has been tough to navigate. Next year, there are still variables, including the midterm elections. So I want to remind everyone, for trading and investing, observe the market like a fish in water. If you get a chance to take a break or have some time off, I encourage everyone to adjust, go outside, get fresh air, and relieve stress. Taking a break is truly for going further in the long run, and that's the right mindset. Last week, let me briefly share. On the first day, I went to Nantou. There, I visited Cheolangpu Fault, the Earthquake Museum, and nearby Jinan Temple. I didn't go to pray. I went to eat clay pot chicken. Many places sell it there. One is Yupenxiang clay pot chicken, which is pretty good. The clay pot chicken set comes with vegetables and the clay pot chicken itself, and the whole thing only costs 750 NT dollars, really cheap. After lunch, where did I go? I headed to a tourist spot, but it's one that not many people have heard of. I went towards Zushan in Nantou, over by Zuzhan and Lugu. There's a small attraction there called, the Menzhongzhugu Battlefield. I don't know if you've ever heard of the Menzhongzhugu Battlefield. What's the Menzhong Bamboo Battlefield about? Well, the whole area is covered with moso bamboo, a really vast stretch, and it's all just bamboo. Very beautiful, just a huge expanse. So what's the story behind that place? According to legend, it was the site where Lin Shuangwen, a main leader of the Tiandihui, which was an anti-king, pro-Ming secret society, once fought against the Qing army in that bamboo forest. They kept fighting, but eventually they were defeated and had to retreat, hiding out in places like Dalun Mountain, Daqianshan, and Xiaotianshan. So that ancient battlefield, that whole vast area of moso bamboo, covering several hectares, was where Lin Shuangwen once fought the Qing army. If you visit, it's actually quite peaceful and serene. Sometimes you might even spot the Taiwan blue magpie, which is our national bird. It's really beautiful. Unfortunately, we didn't see any this time. Then on the second day, if you go out that night, you can stroll all the way down. For example, if you're in the north after visiting the Moso Bamboo Ancient Battlefield, then that night I stayed in Xtyle. If you want to have fun, Xtyle is actually a pretty nice place. In Xtyle, you often stay. Back then, when I was in Sito, I stayed at the Mingshan Forest Resort at night. Mingshan Forest Resort is a famous place that everyone has heard of, also known as Monster Village or Monster Forest. The reason I chose that place is because of its excellent location. From Mingshan Forest Resort, you only need to walk to the second entrance of Sito, and it takes just 2 to 3 minutes. So it's the hotel closest to the Exto Nature Swimming Area. At that time, since we went on a weekday, it was really cheap, just 2,000 NT dollars per night. For only 2,000 a night, you get to stay in a high-end hotel, which was really comfortable. I stayed in Shito for about 4 days. One day I stayed in the hotel-style room, and the other 3 days, where did I stay? When you go to Shito, you just soak in the phyton sides, enjoy the negative ions, and your whole body gets refreshed. Your lungs, your brain, everything gets rejuvenated. After seeing all the signs and getting tired, you need to recharge. Once you're recharged, you stay in Shito. In Shito, you wake up in the morning surrounded by phyton sides, and at night too. Basically, you spend the whole day immersed in phyton sides, with thick mist and beautiful scenery everywhere. For the other 3 days, I stayed in a cabin in Shito, at the Mingshan Forest Resort. The cabins were great, standalone units with a private living room and double beds, all very comfortable. It's very comfortable. Why choose that place if you have breakfast in the morning? Why choose that place if there's no sponsored content? Because Sito is a high mountain area at 1,300 meters. At 1,500 meters high, the Sito recreation area closes at 5, 6, or 7 p.m. There's nothing to eat outside, only squirrels and Reeves muntjacs. You can't eat them, so what can you eat? There's nothing to eat. But next door, at the Minsheng Guild Hall, there's a monster village, or rather a monster village, with plenty of food options, even a convenience store and a gas station. I found its amenities excellent, so I stayed at the Minsheng Guild Hall for 3 nights. On the first day, I explored the Sito Forest Recreation Area for 6 hours straight. I spent the whole day there. I saw most of the famous attractions like the University Pond and the Sacred Tree. I saw everything I wanted to see. The next day, I went to Sito again. Why did I go there the next day? I went to a place about half an hour's drive away to eat whole chicken. There wasn't much citrus fruit, as Emily said. It was great. After staying in Sito, the next day I continued my hiking trip. I went to the mountains. Everyone knows Lingxi 307. The flower center is famous there, and inside 307 are 3 must-see waterfalls, Songlongyan, Qinglong, and Longling. Each has unique features. Songlongyan is spectacular, Qinglong is tall, and Longling looks unique. You really have to see them all. Of course, the most famous thing about 307 is its negative ion concentration, which reaches as high as 110,000, extremely high. I've heard that anything above 100,000 is really good for your health and even has anti-cancer effects. So how long should you stay at 307? I spent the whole day exploring the park, 8 hours, all 8 hours in Shenlinsi. You might ask, teacher, is there really enough to see in Shenlinsi to spend 8 hours there? Yes, it depends on how you explore. I went to every single scenic spot. And here's something extra I want to share that a lot of people might not know. Besides looking at the flowers and plants and enjoying the forest bath, just like the skywalk in Sito, besides soaking up the negative ions, there's a really interesting spot in Shenlinsi. At night, you absolutely have to join in. Besides stargazing, the night sky is brilliant, and you can see tons of stars with the naked eye because the air is so clean and clear. Besides that, if you can stay in Shenlinsi until evening, around 6 or 7 o'clock, you must join the free Firefly Tour. You can see fireflies in Shenlinsi. You can see fireflies in Shenlinsi. You might ask, teacher, how can there be fireflies in November in Shenlinsi? That's right, there are no fireflies in November. If we're talking about the lowlands or regular mountains, usually fireflies appear around May. Around May, you can see fireflies, specifically the black-red firefly. Usually in the lowlands, fireflies are seen in May, maybe in places like Pingxi or Xi. The Xindian, or in the mountains of Xindian, you can see fireflies. The firefly is called the black-spined firefly, and its light flashes on and off, right? Everyone knows about fireflies from when we were kids. Because these places haven't been affected much by environmental pollution, the water sources are good. Now, what's really interesting about the high mountain fireflies in Shanling is that their season isn't in May, it's in November. It's in November, so the high mountain fireflies are out in November, and there's even a free firefly tour then. So how are high mountain fireflies different from lowland ones? Lowland fireflies blink on and off, twinkling, right? But high mountain fireflies keep their lights on the whole time, like little lanterns glowing steadily. It's really interesting. There are lots of fireflies. The whole mountain is full. You'll definitely see at least 4 or 5. You won't miss them. After exploring Route 307, you can spend a day there. Then on the 3rd day, head to Dalanzhang, a platform to see the Sea of Clouds. You can enjoy hot pot while watching the clouds and visit Wu Shu Farm. Wu means martial, Shu means elegant. I'm not sure about the exact characters. How do you describe Shu? It's the character with the mountain radical on the left and Yu, as in travel, on the right. That's Shu. So Wu Shu Farm. You can have hot pot there and enjoy the Sea of Clouds. It's beautiful. On the 4th day, the main event returns. Every day we explore a forest or scenic spot. On Friday, what do? I go from Sanlingxim to Hehuhanshan. Head straight to Hehuhanshan. Why? To climb Hehuhanshan East Peak. Hehuhanshan is interesting. There are several peaks. East Peak, North Peak, and the main peak. Some are easy to reach, you can drive up and hike a bit. These are part of Taiwan's Baiyue, the top 100 mountains. Hehuhanshan's East Peak and main peak are both among the Baiyue. I visited Dongfeng Mountain a few years ago, and this time I challenged myself to climb it. It takes about 1 hour each way. You can take photos and such. Dongfeng Mountain in Hewan Mountain is great because you can climb up from Songsolio. The scenery at the top is very beautiful. The Sea of Clouds and the weather were really good. There were so many clouds, it was like a cotton quilt. Very beautiful. And this time I saw a special sight at Dongfeng Mountain in Hewan Mountain. What kind of special sight was the Sea of Clouds? It was like this. Have you ever been to Hali Mountain and seen the Sea of Clouds? Hali Mountain may have seen the sea of clouds in the sunrise. The sea of clouds at Heiwan Mountain is thicker and larger. In addition, because it is at a high altitude of 3,400 meters, people with altitude sickness should be careful. At 3,400 meters, it is probably higher than Alishan. When you stand above the sea of clouds, do you know what a special sight you see? There is a rainbow above the sea of clouds. So this is very special. This time I saw a rainbow above the sea of clouds. It is not easy to see such a big sight, so it is very beautiful. So I've shared the whole scene of last week with you. If you have time, you can go and plan to visit Chito after you go to the mountain. After Exito, you can go to Dalan Mountain, and then if you have the energy, head straight to Hoan Mountain. That night, I stayed at Singjing Farm, and the next day I visited Singjing Farm to see the sheep and buy some souvenirs. These 3 weeks were incredibly fulfilling and also a really healthy trip. So after coming back, my legs were super tired because I walked about 20,000 steps every day on average. 20,000 steps a day. It was really exhausting. So I just wanted to share this experience with everyone. Yeah, that's it. The vital sides there were just so refreshing. Really comfortable. Someone asked about the itinerary, saying, did the teacher plan the trip yourself? Yes, I arranged it myself. I just kept taking pictures. Okay, so speaking of planning the itinerary, let's get back to talking about investment. While planning the trip, because this time I was thinking about how exactly to arrange everything, for these 6 or 7 days, how should I plan it? I want to go to Shito, Nanto, 307, and Heiwan. How do I fit all that in? Which attractions can I miss? Who should I ask? Well, just ask GPT. You can say, could you help me out and suggest a 6-day, 5-night itinerary? What are the must-see attractions each day? Please provide some recommendations. Tell me, and let me know what time I can go where. Just ask GPT and have it quickly plan it out for you. Back then, I also referred to GPT, and it basically told me which attractions I could visit, and then, for example, you can go around noon or in the afternoon and see what special features there are, like a sea of clouds, or maybe something about Ling Shuangwen, or some historical stuff about the anti-Qing and pro-Ming movements. You can ask GPT about all of that. So next time, we could organize a group trip to Heiwan Mountain. The Jingban area seems pretty good too. Maybe the company needs to budget for group travel. If there's a service like this in the future, honestly, I really do love going out and exploring. Sometimes I just don't feel like staying at home and watching the markets or analyzing them. Sometimes work just gets in the way. Gotta make a living, right? I do love going out. People think I'm always traveling to the US for fun, but I haven't this time. If I did, I'd still be checking the markets while traveling. Jubilee asked if I drive, so I would. Driving all the way from Taipei, then to Nantou, Sito, Sanlingxi, and Heiwanshan. Just driving everywhere, you know? And then Caesar asked, like, these past 3 weeks wiped out a whole year's profits and even turned into a loss. Man, that's tough. I don't know if the AI rally is really over. I've looked at the fundamentals. Well, I don't really know either. Let me tell you all, it's the same old story. I keep repeating myself, but I really want to remind everyone of one thing. Right now, whether you're looking at AI or non-AI companies, most non-AI companies have taken a pretty hard hit. For AI companies, just stick to one principle. When there's a financial report or some good news and the stock price surges, make sure to take some profits at the high. Because if you don't take profits that day, whether it's Nvidia, Microsoft, Meta, or any of the so-called Magnificent 7 or 8, it's all the same. When you see a rally on good news, what should you do? You have to sell some first. If you don't sell, someone else will. Institutions will sell too. Why? Because right now, both the Taiwan and US stock markets are at all-time highs. So the higher it goes, the more you need to take profits at the highs, not keep adding to your position. The higher it goes, the more you should be trimming. Unless there's a big drop, a significant pullback, if it pulls back to, say, the quarterly moving average or another key support level, and the company's performance is still good, then you can consider buying more at the lows, picking up some bargains, or even clearing out your position. But if you don't take action to sell first and then buy back in, then honestly, over the past month or so, with all the volatility in AI-related news, capital flows, and the expansion or pressure of capital, a lot of good AI companies, whether in the Taiwan or US markets, haven't necessarily been profitable. So to play it safe, whenever a stock hits a high, no matter what it is, just take some profits. Of course, I've said a lot already, but let me add a bit more about the officials. Just now, I quickly mentioned to everyone what happened to me last week, where I went to have some fun, and by the way, Gemini is actually more useful than GPT. I've heard that the 3rd generation of Gemini is out. It was just announced last week on November 18th. I've heard that Gemini's computing performance is better than GPT. Of course, every company claims its performance is better than GPT, like EnzoPick. I'll add more information about Google officials later. Anyway, just take a look at these people. Barton Williams, Collins Logan, and even a Trump staunch supporter named Milan. These officials, whether they have voting rights or not, it's clear that some officials, like Williams, have suggested there's room for further rate cuts, which is why we saw a slight rebound in the stock market on Friday. Milan also supports the dovish stance. Collins, on the other hand, said to be cautious about rate cuts, but said there's a possibility of future cuts. Logan, meanwhile, said to keep rates unchanged. So these officials are a mix of hawks and doves. Is a rate cut in December guaranteed? Not necessarily. But is it guaranteed that rates will remain unchanged in December? Not necessarily either. It's a situation caught in a crossfire of differing opinions. Frankly speaking, how to judge or interpret this situation is really impossible. No one knows for sure whether there will be an interest rate cut in December. However, before December 10th, there are several economic data releases and figures from the Federal Reserve that could potentially influence the interest rate decision on December 11th. Therefore, from today until December 10th, there is a lot of economic data that we can use to corroborate and deduce the probability of an interest rate cut or no cut in December. So don't worry too much yet. There's still a little while until mid-December. Whether or not a rate cut is expected, it seems the rate cutting trend will continue next year. As for whether there will be a rate cut in December, I think there are still many variables, so we'll see how it goes. But the cycle of rate cuts should continue next year. Hello everyone, welcome to Kwani Good Night. Today is Monday, November 24th. I'm analyst Young Jita. As for the other thing he mentioned, the US Bureau of Labor Statistics or something like that, the October CPI and the cancellation of the November report will be released on December 18th. This is pretty interesting. Your interest rate decision is set for December 11th, but such important CPI data and maybe even the non-farm payrolls are only going to be released on December 18th. That means none of this information will be made public before the interest rate decision. So why won't it be released? Does no one know? You just can't release it. So the officials at the Federal Reserve can't really carry out or adjust monetary policy effectively because they don't have enough data to work with. So they're basically just fumbling around in the dark. And here's where it gets interesting. If it's December 11th, if they announce on December 11th that interest rates stay the same, and then on December 18th say CPI and inflation are down and the job market is weak, what does that mean? It means that next January, definitely January next year, they'll start cutting rates. It's almost certain they'll cut rates. The stock market might start reacting in advance, anticipating that rate cuts will begin and continue from January next year. Why? Because the economic data on December 18th isn't looking good. But if the data released on December 18th shows that, hey, the CPI actually looks okay, inflation hasn't dropped that much, and the unemployment rate isn't as bad as expected, so if on December 11th, the interest rates remain unchanged, what does that mean? It matches market expectations. Why? Because nothing has changed. And that aligns with the actual data. So the market won't see it as particularly negative news. Why? Because on December 11th, they've already told you the rates will stay the same. So when the data is released on December 18th, it's just in line with expectations, just in line with what the Fed anticipated. That's all. The content of the interest rate decision on December 11th, I think, is much more important than the data released on December 18th. It's kind of like you drew the target first and then you shoot the arrow. So wherever you shoot, you'll hit the mark, right? So no matter what, let's just wait and see what the interest rate decision on December 11th will say. As for the data released after the 11th, I think it's probably not as important as the data released before the 11th. So I actually hope everyone will focus more on the data that comes out before the 11th, because the data before the 11th already gives us clues about whether Fed officials on December 11th will be hawkish or dovish, and that's more important. If they've already addressed all the hawkish or dovish issues, what's the point of looking again on the 18th? That wouldn't make sense. Also, Bank of America has issued notable warnings. He said, well, right now, investors are holding very, very, very low levels of cash positions. Why? Because they've put everything into investments. So he said that the current cash level is at its lowest point in 13 years. 53% of fund managers believe there will be a soft landing, while 37% think there will be no landing at all. Basically, he was just giving everyone a warning up front. The US economy won't have a hard landing, which is good, but because investors are currently overly optimistic, everyone still needs to be careful. There could be a so-called correction from a stock market bubble. This is something you definitely need to keep in mind. So what's the only thing you can do? The only thing you can do, first of all, how do you know if there will be a bubble? No one knows if AI could become a bubble. It's possible, but is it happening now? Not currently. Still, should you stay alert when things are high? Yes. The actions and strategies you need are exactly what I mentioned earlier when I answered Caesar's question at the start. So what should everyone do? You just need to stick to one principle. Whenever you see a surge or a high point, take your profits first and secure your gains. If there's a pullback, though significant pullbacks aren't that common, then as things correct one by one, you'll have extra cash on hand to gradually buy in at lower prices. Repeating this process is the safer approach. So instead of worrying about whether AI will become a bubble, or if it will burst in February, March, or April, or who will trigger the bubble, that really doesn't matter at all, because no one knows when the bubble will actually burst, okay? No one knows when it will happen. As for Bank of America's warning, they're just saying that investors are very optimistic right now, and when optimism goes too far, the stock market is prone to corrections. But as for when that correction will come, nobody knows. But these things, these warning signs, are things everyone should keep in mind. Whenever it bursts, at the very least, you should be prepared in advance. You shouldn't wait until the day it actually bursts and then say, wow, investors were overly optimistic, so the stock market had a major correction, and now there's talk of an AI bubble or certain companies with perpetual motion machines in AI or cash flow issues. If you only start worrying then, it's already too late. By that time, it's already too late. So everyone should always be prepared. You must remember the phrase I've shared with you. Right now, neither the Taiwan stock market nor the US stock market is at a historical low. They're both at historical highs. Both at historical highs. So what should you do? You need to know when to get out. Don't go all in. Use a hit and run strategy. When the price rises, sell. When it falls, buy. This is the hit and run concept. The Taiwan stock market isn't below 10,000 points, and the US Dow Jones isn't below 20,000 either, so pay attention to their positions and manage well. Also, the US Federal Reserve's interest rate is now 4.05, and the yield is 3.7%. It's been between 4.4 and 4.1%. As for expectations of a rate cut, it's about 0.694. Anyway, will there be a rate cut in December? Some people say that after Williams made a relatively dovish statement, you can see that the probability of a rate cut in December jumped from around 30-something% to over 70%. So what? Whether it's 30-something% or 70-something%, so what? You still have almost half a month before December 11th. That 71% could go even higher, or it could go lower, right? So when officials talk, sometimes it's this, sometimes it's that, sometimes there's a tune, sometimes there's a note. You just need to stick to one principle. In December, just make sure you have your strategies in place. But next year, there really is a trend toward continued rate cuts. That's for next year, though. For now, let's just all get through December safely. Get through December safely. As for the US dollar index, it dipped slightly by 0.03% and is holding at the 200-day moving average. We're seeing some fluctuations, but fortunately, the 50-day moving average, the green seasonal average line, is slowly trending upward after the decline. So for now, the US dollar index still has a bit of support, still holding up a little. In a way, could this also mean that December might, if rates and policy stay the same, it won't be very dovish. If it were, the dollar could drop. But if not, or if it's a bit hawkish, the dollar may hold up here, staying above the 200 or even 50-day moving average. So we need to watch it going forward. Hello, 520 Happiness. Good evening. Good evening. Okay, now let's move on to the international situation. I'll just give everyone a quick update. So about Ukraine and Russia, the US has proposed a so-called 28-point peace plan. There are a lot of details in it. I believe that from Friday until now, everyone has probably seen a lot of newspaper articles, news reports, and magazines. Even today, there's still talk about this 28-point peace plan. To put it simply, some of the points include things like limiting the number of Ukrainian armed forces, and then saying that they can't Ukraine join NATO, and they also want NATO not to support Ukraine in joining. In addition, Russia and Ukraine are supposed to agree not to attack each other to refrain from mutual aggression. The United States, on the other hand, has some reconstruction agreements with Ukraine, like cooperation on natural gas, mining, and so on. The European Union is also involved, providing some related reconstruction funds and so forth. These are all minor issues. In my view, they are relatively minor but troublesome. The real issue is what's mentioned later in these 28 points. This is where there's a lot of uncertainty. I actually think this might be the most important part of the 28 points, and ironically, this is the part that's not easy to get past, if it can be passed at all. To some extent, for Ukraine, this is a bit of a national humiliation. Why? Because one of the points says that the territories currently occupied by Russia, like Crimea, the Crimean Peninsula, Luhansk, Donetsk, all have to be recognized as Russian territory since they've already been occupied and claimed as their own. As for places like Kherson and Zaporizhia, which are on the front lines, it basically depends on how far the fighting goes. Wherever you manage to fight to, that's what counts. If you take half the territory, then half goes to Russia and half to Ukraine. That's the idea. The frozen line is just the front line, the ceasefire line, and that's how they want to settle it. Basically, this tells Ukraine to accept it. To put it simply, it means you have to give up territory in exchange for peace. Just give up land for peace and don't join NATO. That's basically it. Now, looking at Ukraine's current situation, will they fully accept this? I think there's still a lot of uncertainty, especially when it comes to asking them to recognize things like Luhansk and Donetsk as entirely Russian territory. I don't know how people in Taiwan would feel if this happened here. I just think this is a tough issue. It's hard to handle. Even though there are these 28 points, I think there are probably many things on them that could be discussed more. As for what the US and Ukrainian representatives said, they claimed there was progress in the Geneva negotiations. But what kind of progress? They didn't say, and no one dares to say. Ukraine didn't say, the US didn't say, no one said anything. They just said there was progress, but what that progress is, nobody's saying. And then, as for what Trump said, he mentioned that November 27th should be the deadline for Ukraine to accept this 28-point peace agreement, but it could be postponed. Anyway, as far as I can see right now, I think after these 28 points come out, do you think Russia and Ukraine will stop fighting? I don't think so. Do you think Ukraine will just accept this bullying? It doesn't seem that simple. In the end, does bringing up these points help? We'll have to keep watching because right now it's unclear, like looking at flowers through fog. It feels like there's some progress, but also like nothing's really happening. No real progress. It's like when two people are in an ambiguous stage of a relationship. You think there might be something, but maybe not. As long as both sides are willing to negotiate, that's good. Negotiations between any parties are positive. Since that's the case, it won't help the original prices because geopolitical risks are going down. So what about crude oil prices? Right now, it's still in a bearish trend. Yesterday and today, it dropped another 1.09%. So as for how the US, Ukraine, and the other parties are going to negotiate, I think it's still going to take some time. It won't happen that quickly. Just let them keep talking. But as long as they're talking, there's hope. And in any case, geopolitical risks are going down. So this kind of topic is just something to keep an eye on, nothing more. As for economic data, there aren't any important releases today. So for now, everything's calm on the Western front. Just take it easy today. Keep an eye on the market. Tomorrow, we get September retail sales month over month and US September PPI year over year and month over month. Those are more important. The rest, like real estate numbers, existing home sales, Richmond business inventories, just glance at. So tomorrow, I'll focus on retail sales month over month and PPI year over year. Wednesday brings employment, durable goods orders month over month, and Chicago PMI for purchasing managers. What's more important on Thursday? On Thursday, there's the Fed's Beige Book. Although Thursday, November 27th, is Thanksgiving and the markets are closed, and our evening show will also take a break, at 3 a.m. that day, there's the Fed's Beige Book release. In the evening, there's also the European Central Bank's October Monetary Policy Minutes, which are also very important, so keep an eye on those. Then on Friday, although there aren't any economic data releases on Friday, it's what we commonly call Black Friday, the start of the Black Friday shopping festival. I remember seeing in the news today that at Costco, yesterday, or maybe it was this morning, people were already lining up at the door as early as 6:30. Why are people lining up? Because Black Friday shopping is starting. What does it mean when the season starts? If I have time tomorrow, I'll explain. For now, just know that when it starts, many things go on sale. I heard a TV is discounted by $20,000. That's the kind of deal. As for what Black Friday is and how it's related to Thanksgiving, if I have time tomorrow, I'll give a little background. Exactly 1 year ago today, we actually talked about this before. Why is it called Black Friday? What kind of impact and benefits does Black Friday have on the US retail industry and economic revenue? After Thanksgiving comes Black Friday, and then right after that is the Christmas shopping season. This period lasts about a month. Why does it have such a significant effect on the US economy and the quality of economic data, especially for the retail sector? It's all closely connected. Why is it called Black Friday and not White Friday or Red Friday? If there's time tomorrow, I'll add more details for everyone. But for now, just remember that these economic data and events are really important, so keep them in mind. Even on Sunday, you can't really take a break. On Sunday, China will release its official manufacturing and non-manufacturing PMI for November, which is also related to the Chinese stock market. So if you have investments in mainland or Hong Kong stocks, make sure to keep an eye on this economic data on Sunday. As for the earnings reports, the more important ones this week will probably be Dell and HPQ, Hewlett-Packard, on November 26th. Starting in December, companies like Marvell, Salesforce, and others will also be covered and supplemented in the evening show. Anyway, for the third quarter earnings reports, roughly ever since NVIDIA released its earnings report in the early morning of November 20th last week. Let me think, where was I on the early morning of November 20th? Where was I staying on November 20th? I think I was still staying in Shito at that time. That day, I had just finished visiting 30C. That day, I went to 30C, joined the Firefly tour, and only got back to the hotel at 8 p.m. Then I just briefly checked. NVIDIA's earnings report was about to be released, and that was pretty much it. The next day, in the early morning, the report came out, and it was better than expected. So that's that. So the more important tech earnings reports for quarter 3 actually all wrapped up last week. Basically, everything finished last week. Next, starting in December, the quarter 4 earnings reports will start coming out one after another. Anyway, as long as there are earnings reports, we'll keep tracking them for everyone. For now, looking at the quarter 3 earnings, most companies are still doing okay. The outlook for the fourth quarter is still relatively neutral to slightly positive, so there's no need to worry. Earnings are still looking good overall. As for AI, the boost and momentum are still very strong. It's just that people are concerned about the stock's valuation or the ongoing capital expenditures for AI. This is the kind of situation everyone's worried about. Of course, when it comes to AI, as we just mentioned, OpenAI is facing operational pressures, and its biggest competitor is Google. On November 18th, Google released version 3, and according to major testing platforms, its performance surpassed both GPT 5.1 and Anthropic's Claude 4.5. It's really good. There's also a media outlet called The Information, which reported that OpenAI CEO is Sam Altman. Okay, so Altman said that this company announcement, well, this is a rumor. According to the report from that media outlet, he sent an internal letter to the company telling his employees that Google is performing better and better in all aspects, and that his company, OpenAI, might be facing a rather tough and challenging period of competition. You can imagine that right now, Google is catching up quickly in AI. The pace is very fast, and their growth is impressive. Why? Because honestly, Google is very different from OpenAI in a major way. Google has access to huge amounts of big data, which can be used in many ways. For example, when we use Google Search to look up public opinion or find information, all of that is data. OpenAI might not have access to this, but Google does. And if you look further, short videos, look at YouTube. It has YouTube Shorts, right? When you watch videos on YouTube, all the things related to the user interface, user habits, what kinds of videos people like to watch, what kinds of ads they prefer to see, all of this is big data that Google can use. This is valuable economic data for AI development. There's so much of it. That includes Google's Gemini and many other AI-related things. In short, there's a lot under Google's umbrella. There are endless examples, just so many. They're even developing things like autonomous driving, Waymo, and self-driving cars, among many other things. Google is also really strong in cloud computing. So in this area, in such a massive, with so much company revenue, such a wide distribution, and access to so much big data, they really have everything at their disposal. In fact, in the future, they truly have the potential to be on par with OpenAI. So as we can see, among the Magnificent Seven, Google's stock price has actually performed relatively strongly. It's quite impressive. For example, last week, it continued to surge by 3.53%, and it's still holding above the 20-day moving average. If you pull up the stock prices of the Magnificent Seven one by one, you'll see that right now, there aren't many that are still holding up. There aren't many stocks still above the monthly moving average. Google and Apple, those two are basically the only ones left. As for Microsoft, Meta, Amazon, and even Nvidia, some of them have even fallen below the quarterly moving average. Tesla's fluctuating, moving up and down. Right now, among big players, only 2 are above the monthly moving average. The rest are at or below the quarterly moving average. At the moment, I think performance is still steady, mainly those 2 A's. That is, the 2 A's, one is Alphabet, the other is Apple, so it's double A's. Right now, it's just double A's, not Acer or Asus, to be clear. Currently, the double A's in the US stock market are doing better, which are Apple and Google, so keep an eye on them. For future development, especially in AI, this Gemini 3 thing, I still think everyone can keep an eye on it over time. Because right now, it seems like the market's evaluation, someone just asked about Nanshan, saying that Nanshan is better than GPE, right? Okay, so I rarely use Gemini myself. I usually use GPT, or sometimes I use, what's that called? Prestige? Yeah, that one's pretty good too. I think it's quite decent for AI searches. Pretty good. Okay, someone just mentioned like, why did Costco have a big sale on computers today, but not on coffee beans? Right, the stuff you want to buy isn't on sale. So I don't really know which day they have deals or what kind of promotions they have. I just heard there are a lot of things, tons of stuff, you know? All right, so what about Jeff's gift? He also mentioned that Foxconn Internet, a subsidiary of Han Hai, closed at 6 today. Is that a new 2-month low? Lately, if you look at those AI companies, as long as the US stock market is dropping, AI-related stocks are also falling. The Taiwan stock market can't avoid this either. Stocks that were stronger, like TSMC and Han Hai, as long as the US market and AI stocks are down, almost all AI stocks in Taiwan have also been dropping recently. Now, ASV stocks in Taiwan are also falling. For index levels, the quarterly moving average is barely holding up. It's on shaky ground. If it can't hold, that's the idea. But don't forget, the Philadelphia Semiconductor Index in the US is usually more closely linked to the Taiwan stock market. So however the SOX index moves, Taiwan usually follows. So keep an eye on that. Lastly, I'll add a bit about some stock prices and briefly mention a few things since time is limited. I'll go through them quickly. In response to this news, there's talk that Trump may sell H200 chips to China, but no confirmed orders yet. Take this news at face value. Why? Even though the H200 chips are for use in China, right now, you have to consider that China might not want to buy them. Only if China is willing to order, that would help Nvidia's stock price and revenue. But China might be developing its own solutions. Companies like Alibaba, Baidu, and Tencent all have their own AI development. There are many AI software and platforms. If you offer the H200 chip, which is low-end, to China, they might not want it. China might not be interested, especially since Huawei is making its own chips. There are many options in AI. So even if you consider selling these chips, you still have to see if China wants them. Just because you offer them doesn't mean they'll take everything. Not necessarily. So I think this news is just something to note, and whether it will help revenue in the future remains to be seen. We'll have to keep watching, but if there are shipments, of course it will help Nvidia's market share in China. I can only say it'll help their market share. It will help their market share, and to some extent, it will definitely benefit their revenue. It's just a matter of how much of a boost it will provide, whether it's significant or minor. I think that's something we still need to observe. If Trump hadn't, back then, responded by not allowing these people to export, then maybe the development of some major enterprises in China wouldn't have progressed so aggressively. You could just use someone else's products. But now, with such rapid development, if performance is good, matching or beating H100 or H200 chips, why buy Nvidia's chips? That's the dilemma now. It's awkward. What about Nvidia's stock? Their earnings report is fine. Last week's was very strong. From a technical and market sentiment view, the stock price could see notable short-term volatility and corrections. Last week, it fell 1%, so watch if moving averages are broken, especially the quarterly one. The only positive is that although the quarterly average was broken, both the quarterly and monthly averages, the red and green lines, aren't sloping down. As I mentioned, if these two lines are flat or rising, there's little problem. If they slope down, be alert and cautious. Also, in mid-August this year, the price dropped below the quarterly moving average. It broke below the quarterly moving average twice, but climbed back up. So this time, we need to watch longer to see if it can get above that level again. If it does, the short-term pullback pressure will likely be resolved. But if it doesn't, and both moving averages trend downward, it's better to exit first. This is the general idea for short-term trading. We're just talking from a technical analysis perspective. Fundamentally, there's nothing wrong with the company. The financial reports are great. Technically, in terms of valuation, it seems people have doubts about the current stock price, which leads to this situation. Alright, so the analyst also mentioned something about NSCI. They're even considering removing companies that use Bitcoin as an asset from the index components. The most famous example is NST, which is MicroStrategy. It's called MicroStrategy in Chinese and NST in English. This company has 50% of its assets invested entirely in Bitcoin. So he said that if this index component stock removes NSTR, there could be some passive funds, nearly $2.8 billion worth of these stocks, that would have to be sold off entirely. Of course, their CEO pushed back against this, but regardless of the rebuttal, for now, it looks like that's the situation. Bitcoin stocks, Bitcoin prices, they're all dropping, right? Everyone's seen the recent news, haven't they? That guy, that big shot, I think it's Jeffrey Huang, right? Jeffrey Huang said that just in November, just from November until now, he's already been playing with Bitcoin. There are also things like Ethereum, BB, and other virtual currencies. For example, with Bitcoin, he was liquidated 71 times. He has a lot of money, but still 71 liquidations. He lost 650 million. From my perspective, you can see this in MicroStrategy stock price. Recently, pressure from Bitcoin's pullback has been huge. MicroStrategy dropped 3.74% yesterday, and since July, it's fallen from 405 to 170. It dropped from 450 to 170. I don't even know how to describe that. That's almost a $300 drop, a 70% loss. In just 4 months, from July to November, it's been falling, and right now, it doesn't look like it stopped. There's no sign of a bottom yet. If you own this stock or any related Bitcoin products, be cautious, because things aren't looking good. There's no clear sign of a bottom yet. Until we see that the decline has stopped, related companies and B assets still face short-term pressure. So everyone needs to be careful with capital management and position sizing. Someone asked if Oracle is still worth holding. In the short term, Oracle has already fallen below the moving average and may have dropped below the annual line. I'm not sure if it broke through, but the gaps from recent days have been filled. Right now, the overall trend, Oracle has some pretty big concerns because the market is worried about its debt, specifically that its debt costs are too high and it's taken on too much leverage. Its cash flow might even turn negative. So before this issue is resolved, it's hard for Oracle's stock price to quickly find a bottom in the short term. We can't see it yet, at least not in the short term. But if you ask whether its fundamentals are good, they're actually not bad. AI development, AI infrastructure, AI equipment, all of that is fine. They have partnerships with OpenAI, and they're working with NVIDIA, buying hardware, and developing well. It's just that their debt costs are too high, way too high. So people are worried that in the future, they might run into liquidity problems, which could lead to some financial issues. So before this situation is resolved, Oracle is still relatively weak for now. At least in the short term, it's still on the weaker side. You need to be a bit cautious, just a bit careful, okay? All right, let me briefly talk about some companies in the US stock market before the opening. Some healthcare companies saw their stock prices rise in pre-market trading. Why? Because there are rumors in the market that the Trump administration might continue to delay the implementation of the so-called Obamacare healthcare system. That is, the healthcare insurance policy might be postponed. So in pre-market trading, companies like Forrest rose by 6.88%. Molina Healthcare and others like Becton Dickinson all went out by 3% to 6%. Alphabet's Google is still performing strongly. After Gemini 1.3 launched, Altman said Google is up 2.79% in US pre-market trading, which is strong. Coinbase is rebounding after a big drop, rising 2.46% pre-market. Micron, Merck, and Tesla are also up slightly, each rising about 1.2% in US pre-market trading, about 1.5%. For companies that are down, Albemarle, which makes lithium batteries, dropped 2.41% pre-market. Eli Lilly fell 2.24%. Also, Amgen and Consolidated Edison slipped, both down about 1.1%. That's the general picture. Looking at today's US stock market, like the futures market or the stocks that are up in pre-market trading, it seems like the trend will probably continue with some mild fluctuations and a slight upward movement. But if you're expecting the Dow, the Nasdaq, or the S&P to immediately hit new highs, that's not going to happen so quickly. In the short term, after breaking below the quarterly moving average, the market will likely enter a period of choppy consolidation and rest. To repeat, in the short term, the index or individual stocks are acting like regional investments. After a big run-up, there's a pullback, and after breaking below the quarterly moving average, we see choppy consolidation. If this consolidation holds and price keeps fluctuating here, there's still hope and no need to worry yet. What you should watch for is if, after breaking below the quarterly moving average, price can't recover quickly or stay near it, and instead drifts further away. Then the next correction would be down to the 200-day moving average. That's just reality from a technical analysis view. So for the quarterly moving average now, whether it's the Dow Jones, SOX index, or big tech giants, it's a similar situation. They're still near the quarterly moving average, fluctuating above and below it. They aren't holding that level firmly, so it's not stable. If the price moves further away, it could gradually correct down toward the annual moving average, where the pullback pressure will be much greater. This also applies to the Taiwan stock market. When managing your positions, remember not to go all in. That's enough. Looking at the main indices, the Dow Jones is still doing well, the Magnificent 7 index is okay, but the Philadelphia Semiconductor Index faces more pressure, so keep an eye on the SOX index. A long bearish candlestick covered last Thursday's long black K line, so we need to pay close attention to this long black K. Right now, the chances of it recovering immediately in the short term aren't very high, not very high at all. And I've circled this area because its monthly moving average has already started to curve downward. Its monthly moving average has already turned down. Alright, so I think the short-term pullback pressure is currently increasing a bit, so you still need to pay attention to it. Although we haven't entered a major bear market, and it's not a long-term bearish situation right now, the short-term pullback pressure is still present. It's still there, so make sure to manage your risk. And when it comes to individual stocks, everyone really needs to pay close attention. Be a bit more cautious. Of course, if due to time constraints today, there are some stocks or questions I don't get to answer, that's okay. Just leave your questions here, and when I have time tomorrow, I'll reply to each of you one by one. I read every single comment. You know, even though coming back from the holiday is really exhausting, today I kept catching up on work, just making up until I finally finished the presentation at 8 p.m. It's been so busy lately. Of course, taking a break is supposed to help us go further in the long run, but I found that after a long holiday, it feels like the road ahead is even longer. How did that backfire? I really don't get it. Anyway, I still wish everyone smooth trading, and remember, when class is over, please help us by liking, subscribing, and sharing. And when class is over, besides liking, subscribing, and sharing, remember that position management is still the most important thing to keep in mind right now. Lastly, I wish everyone smooth trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.